Good morning from London. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. We're an hour away from the opening trade. Here's what you need to know. French bonds rise as political parties pull candidates in an attempt to block a potential far-right majority ahead of the second round of voting. Meanwhile, it's the final countdown to the UK's election, with polls pointing to an historic victory for the opposition Labour Party. But surprises can't be ruled out. We'll break down the potential outcomes. European futures are in the green after US equities hit record highs as Jay Powell says the US is back on a disinflationary path following the latest jobs data.
In the meantime, a quick check on these markets. Although you're already kind of seeing it there, Euro Stoxx 50 futures higher by 0.6%. The FTSE 100 on the back foot, higher by 0.5%. Eurodollar 107.39, but oil I think is where your focus should be. Just shy of $87 a barrel. Some of that is hurricane, some of that is risk sentiment. We're going to dive into it. The countdown to the opening trade starts right now.
Wednesday the 3rd, good morning. The last day of the trading week. If you want to get it done today, because the rest of the week, to be honest, is a washout. The US is going to be out tomorrow, and that effectively means that Friday is a bit of a non-event. That does not mean, though, that there are not significant risk events that we are building up to. The UK election, maybe that'll cause some headaches for traders, but it's more likely it's going to be France front and centre for the rest of the week as we count down to the second round of the French election. And things are getting interesting, aren't they, Anna?
Yeah, absolutely. Election chess is underway, I'm informed by colleagues over in Paris. Le Pen majority does look harder to achieve than it maybe did a couple of days ago. At least that's what we take away from the way that some of the other parties have dropped out in certain races. That Republican front, the cordon sanitaire, as you referenced yesterday, is being established to try and keep the far right out. 210 candidates not standing as a result of that kind of assessment. That brought the spread down. Yesterday, we saw some of this in session, down to 71 basis points on that France-Germany spread. That's not over 80, which is where we've seen it, but it's also not back to 50. So it seems as if there is some sensitivity and some nervousness around whether there could be a majority for the far right.
So then in terms of the market reaction, you talked about the spread there as well. Let's talk about the effects to it as well. Eurodollar continues to be, I think, the most interesting pair, because not only do we have the European side, we have the dollar side as well. And yet you are seeing still 107.40 is what I'm seeing on Eurodollar right now. Do we then see that gridlock narrative still be a positive for the euro? That's what my question is. I
think we don't know yet, and I think it feels like actually the dollar story is still the stronger element of that narrative, and the strong dollar story is kind of there and present at the moment. I don't think anybody's quite figured out what Donald Trump would mean for the dollar, but potentially a positive pickup on the basis of that story. We'll talk in a moment about what's happening in the bond market with that political story. Let's talk about what happened yesterday in the session. Why does the market still listen to Powell is my question. He has delivered so many head fakes over the last 9 months. And yet yesterday, once again, he talks about the fact that disinflation's back on track. And there we go, the market reaction.
The market reaction, I think what's interesting as well is if you actually listen really nitty-gritty into what he said, he didn't say anything that different than what he's really been talking about. He's talking about the fact that we need more confidence when it comes to cuts in the future. He's talking about the fact that you are starting to see less demand for jobs and in the labor market, specifically referencing the JOLTS data. We got that as well. And if you actually look at not only the JOLTS data, which came in a slightly higher than expected, but you also look at the revisions. I thought the revisions were really interesting because historically in the last couple of weeks, the revisions have been significantly lower and revised lower. So how much confidence can you really put into the data?
Yeah, I mean, you could, to your point, Kriti, you could have taken Powell's comments entirely differently, couldn't you? You could have focused on the fact he says we need more time to cut, and you could have taken that as pretty hawkish. But instead, the market said, oh, he's talking about disinflation. Let's buy stocks. I noticed yesterday, though, that there was a lot of Tesla action, and Nvidia was not part of that stock rally yesterday.
It wasn't, but tech stocks were broadly quite positive, and they continue to add the biggest points upside to the S&P as we come through that record, which I think is interesting as well. You've got this positive bond correlation with equities again, which I think is fascinating, and I can't quite figure out what is going on. And one of the kind of the most logical explanations for me is that people are buying the Magnificent Seven because they want somewhere to hide. And in some ways, therefore, the kind of the positive bond correlation makes sense, because if you want somewhere to hide, you buy bonds. If you want somewhere to hide, maybe you buy the Magnificent Seven. And that's why equities and bonds are doing the same thing right now.
Right, and there are different things happening at different ends of the bond curve. And that could be interesting as well when we're thinking about how that relates to other assets.
This takes us back to politics, doesn't it? Which I think is kind of the driving story right now. We've talked about what's happening in Europe. Kriti's talking about the spreads there and what's happening with that narrative too. But the politics is really interesting. Joe Biden's now blaming jet lag for his poor performance in the debate. We've gone through the cold story. Now we're on to jet lag, and the excuses keep on coming. But the polling still looks pretty damning right now. Yeah. You've now got Congressman Doggett coming out and saying, you know what, we need actually maybe to rethink about our strategy here. You've got this New York Times story, which is pretty negative as well. All of this points to this man, Donald Trump, as being potentially the victor in the upcoming November election. And the market continues to steepen on the back of this. And the steepen of trade is in some ways logical, i.e., long-term bonds are going to reflect an inflationary outlook which Donald Trump is going to drive.
We do the morning shift. Give him some slack. You know how hard it is if he's jet-setting around the world. I think it's important.
Isn't that part of the job?
Sure.
I don't get to prep for the show with a week in Camp David. But I'm also not over 70.
Maybe we'll put that
or
on
80.
the company Amex in the future, a week in Camp David to prep for every show. This is important, I think, in terms of, you mentioned the polling numbers as well, because he's not only dropping in polls against President Trump, he's dropping in polls against candidates who aren't even on the ballot. Gavin Newsom, Kamala Harris, both of which have been speaking about really re-electing the President of the United States. They haven't even talked about indicating that in this round you're going to see it. The key date, Anna, July 21st, around that virtual roll call to solidify whether or not President Biden is the Democratic nominee.
Yes, absolutely. And what happens to the polls as a result? What assumptions does the market make about Trump and his inflationary agenda or not? I mean, I've seen various takes on that, but the market does seem to be reflecting that assumption that Trump is more inflationary.
Politics. Top of the agenda. We've got a lot to talk about over the next couple of hours as a result of that. So let's give you an idea of how we're going to tackle some of these challenges and what's on the agenda. Sandra Philpin from ABN AMRO is going to be joining us a little later. Emma Wall is going to be joining us from Hargreaves Lansdown as well. We'll get her take maybe on what is happening with the UK political story, which seems very becalmed at the moment. Is there going to be a surprise? Could there be a surprise in that story? Plus, we're going to talk about the risks in the banking sector. The chairman of the European Banking Authority is going to be joining us a little bit later on. The EBA has just published its latest risk assessment report. We'll get an idea of kind of where the risks lie here in Europe. And later we're going to speak to a top city executive and former Conservative minister to get a take about what that election tomorrow could ultimately bring and whether there could be some surprises and whether or not business is going to get what it wants, Kriti.
You're talking about the domestic politics. Let's talk about the geopolitics internationally as well, because we also have a great lineup of interviews from the Finnish president and, of course, the U.S. ambassador to NATO as well. They're going to be discussing not just the war in Ukraine, but China's role in all of this as well. And the common thread here is simply that we know there's these tensions ratcheting up between the United States and China. What makes the things like the debate so interesting and the U.S. election so interesting, the fact that you're now getting the EU, more European voices to kind of speak up about it is important as well. I should also mention today is the last day before the EU tariffs on China on EVs kick in. That kicks in tomorrow.
OK, so that's certainly something to watch in terms of that geopolitical relationship. Geopolitics gets a mention in the EBA report as well. So back to the banking story. Yep. But on the NATO subject, it is interesting that a lot of the sound we're going to play later does focus on China. It focuses on the role that China is playing in supporting Russia and not being a neutral party, just like the West is not a neutral party in Russia's invasion of Ukraine.
This is where the US and the Europeans feel like they are aligned. They do feel like they're on the same page when it comes to China, albeit maybe the Germans take a slightly more cautious view when it comes to their Chinese trading relationships. I think it's the funding story that I think is where the difference lies. So this is where the markets and the politics do seem to align, is that Trump represents the biggest kind of unknown right now and the biggest risk. Markets are pricing in the Trump presidency through the steeper curve. Europe is pricing it in, trying to figure out how to price it in via potentially having to spend significantly more on defence.
And it's the contingency plans that NATO in particular is trying to work out. And the Finnish president as well has also commented on it, to the point that ahead of the ministerial summit next week over in Washington coming out of NATO, they're going to be talking about how to centralize some of those powers, some of the abilities right now that are coordinated between countries, now giving those powers to NATO itself as an institution.
Yes, and they'll be celebrating 75 years of NATO at a time when people are going to be asking questions about what a Trump presidency, if it happens, would mean for NATO. Here are some of the data points we're watching out for then today. Euro area PPI is due this morning. We had the CPI number coming down just a fraction, as we expected yesterday. German 10-year auction of 5 billion euros. US initial jobless claims later, Fed minutes later. Remember, of course, that some of these data points are coming a day early because the markets are closed on Thursday. And because the markets are closed on Thursday, they're also closing early today. So bear that in in mind. Central bank speakers Williams, Lagarde, Cipollone, Lane and Knott. So plenty of central bank names to focus on.
Got lots on the agenda. Let's talk about what else you need to know this morning. First up, shares in Novo Nordisk, Eli Lilly, falling. This after the US President Joe Biden continues his push for cheaper medicines by demanding price cuts on these two companies' blockbuster weight loss and diabetes drugs. In an editorial published in the USA Today, the president said the companies are charging, quote, unconscionably high prices that are above those paid in other countries. Independent film and TV producer Skydance Media is said to have reached a preliminary agreement to buy Shari Redstone's National Amusements and merge with Paramount Global. Sources say an agreement could be announced within days, although the deal could still fall apart. Paramount shares jumped post-market, and Tesla shares jumped, as we've been mentioning, after a second consecutive drop in quarterly deliveries. Wasn't as steep as maybe initially forecast. The EV maker delivered just shy of 444,000 vehicles in the second quarter, 4.8% fewer than a year ago. Tesla blamed the slowdown on a suspected arson attack at its Berlin factory, as well as shipping diversions via the Red Sea. Could have been worse. Tesla was, Anna, as you were pointing out, a big part of the rally yesterday.
Yes, it was. It definitely was. I'm interested in a piece by Liam Denning saying only Musk's robo-taxi can save Tesla investors now. That, on the back of those second quarter numbers, he suggests that they all but ensure a decline in earnings this year. But it seems that the market found something to get cheerful about.
And this wasn't the expectation, right? Everyone was expecting a fairly low number going into this. So to have a more optimistic than expected number is why you're seeing that beat. But again, this comes in the context of we still don't know what the read-through of some of the tariff policy is. We don't know what the read-through of some of the supply chain stories is. Plus, Tesla stock has been in on kind of this AI rally that we're seeing in the stock market as well. So I'm curious how much of these numbers actually sustain.
Yeah, the point that Liam is making is that actually if you dig underneath that beat, that the expectations have been coming downhill really fast. And so that it was his reason why he was sort of sceptical as to why we saw that rally.
Tesla is a car company. That is what is increasingly becoming clear. Your talk about robotaxis is interesting in as much as there's always been this hope. This is an AI company, this is a robotaxi company, this is an autonomous driving company. All of that has yet to crystallise, and as a result of which we focus on how many cars this company actually delivers. And it's interesting at a time when the EV story broadly is struggling, that this is an EV company that is struggling. It is a car company at the moment, and the market's kind of still yet to really get its arms around that narrative. Day to day, how do we trade this company? Do you put it on a GM multiple? Do you put it on a Microsoft multiple? I don't know.
That is the exact dislocation argument that a lot of the auto analysts are making as well. But again, how do you trade it? Because even if you look at it from a software perspective, Tesla has its hand in a million different things. This is why Elon Musk's pay package was so relevant to the stock as well. The options that you have on that actually affects the entire index as well. So even if you're not literally or metaphorically invested in the Tesla story, you are still exposed to it as a passive investor simply by being exposed to the S&P 500.
OK, we will think about the broader market story shortly. Coming up, we'll break down scenarios for tomorrow's UK general election. Plus, as Tesla shares soar, we will be back to that story. We'll talk about EVs. We'll get an update on what went right and what went wrong for Tesla yesterday. Up next, Powell says we're on a disinflationary track, while Lagarde warns of a bumpy road. More on the state of play for the world's biggest economies. If you have any questions, please get in touch. IB plus BBTV Go is the function you can use on the Bloomberg terminal. If you want to put questions to our guests, then please get in touch with the team. This is Bloomberg.
We do think policy is restrictive, and we think that's appropriate. I think if you look at the labor market in particular, you're seeing demand for labor gradually come down in the form of job openings. You can see the labor market is cooling off, appropriately so, and we're watching it very carefully.
We don't need to have services at 2%. We have to look really what is behind it. And what's behind it is a lot of wages. Services has a very high component of labor. Wages also suffer from the lag impact of the labor system that we have in Europe.
Jerome Powell and Christine Lagarde speaking at the ECB forum in Sintra. Let's get some thoughts on the global economy. Sandra Flippin joins us, chief economist at ABN AMRO. Sandra, really nice to speak to you this morning. So we just heard there from Jerome Powell and from Christine Lagarde, both talking to some degree about tight labour markets. I wonder what role you think tight labour markets are playing in both of those geographies in terms of removing any urgency to cut interest rates. Sure, the ECB has gone once, but doesn't sound as if it's in a hurry to cut again.
Yes, that's right. And I think what Christine Lagarde just signaled there is indeed that the labor market needs to basically show evidence of not accelerating. So the ECB has its own early indicator of wage growth, and it will want to see that those data come in by the end of this month and to kind of make sure that it's not re-accelerating. Their own projections are that it's going to move sideways. So what we're going to see if that is in line, if the data come in line with that forecast, then they will have enough confidence. But if it is re-accelerating, they won't.
And so with that as the backstory, Sandra, what is your expectation now for how the ECB handles the second half of this year?
Yeah, we actually think that the market is going to reprice the additional rate cuts that we are expecting. So we think that indeed July will see a pause, but then from September the wage data will give the ECB enough confidence to start cutting again, and then keep cutting at every subsequent meeting until they reach target.
Sandra, can I talk more broadly about what is happening with the inflation story? Jerome Powell was convinced yesterday that he feels that the disinflationary story is back on. He did also reference the labour market, and I'd like to connect those two factors. Politics in the United States looks like it's moving in Trump's direction. If Trump takes a stronger stance on immigration, how inflationary could that be? If in France we see a stronger line being taken on immigration, how inflationary could that be? Can you connect the labour market story and the inflation story for me, and give us a sense of sort of understanding and clarity as to how we should think about this?
Great question. Thank you. So I think that the direct connection is not that evident. I see your point kind of theoretically, but usually a stance on immigration basically takes a long time to materialize in execution. That indeed would then increase labor shortages, and that being a start of wage rises, and that being inflationary. So I guess that's the story you want to get at. But those things take time. There are laws and institutions in the way of those plans versus execution. And so I don't think that link will be that evident. No, I think the danger is more in the gradual. Sorry.
Do you think we see it more in the growth numbers? If you were to see, to what extent has US growth been driven by immigration? There's been a lot of head scratching about why US growth has been as strong as it is. Now, part of that's going to be down to the fiscal spending we've seen delivered by the Biden administration. The Trump administration started. The Biden administration has continued it. The Trump administration, if it were to come into force, would continue it likely as well. But how much of it has been driven by immigration? I'm trying to understand what role immigration is going to play. As you say, unlikely to impact quickly, but it clearly has had an effect at some point in the US economic growth story.
Yeah, I mean, immigration has some impact. The big quit, if you remember, post-pandemic, is also a presence at the labor market that is decreasing. And you know, this is moving in a very bumpy way. So indeed, everyone who is not available on the labor market is an inflationary effect, whether that is immigration or whether that is other reasons for a lack of labor supply. But that is evidently the case. But I don't think you can link immigration to growth. I do think, at least not directly, I do think that there are fiscal measures that can be taken by a Trump or a European Parliament or even the French Parliament or the British Parliament that could be directly inflationary. And that depends also on, for example, the fiscal room to maneuver any parliament has.
So, Sandra, we talked about the U.S. story. We talked about the Europe story as well. I want to get your take specifically on the story in the Netherlands when it relates to not just the immigration, but also as it's kind of stuck between the two largest economies in terms of sanctions on ASML. You traditionally join us from Amsterdam, and I want to get your take on it because I think you have a unique perspective. What does that look like in the next 6 to 12 months? We're talking about the ripple effects into the economy. If you start to see sanctions or even more price concerns or even immigration concerns put on ASML, how does that show up in the supply chain constraints for the rest of the world?
Yeah, so indeed, ASML is an interesting example because it is really an intermediary of global trade, and the fact that these chips industries have a very limited amount of firms that can supply. So and at the same time a huge inflexible and elastic demand. So that means that consumers are willing to pay a lot for the chips that they are delivering, while at the same time the supply of those chips is very restricted. So that means that few firms can affect those prices, and those prices happen to go into everything else. So indeed, ASML is an interesting case, and it is very worrying that depending on the election outcome in the U.S., we might face a lot of tariffs, and that will be hampering to global trade, and particularly for a firm like ASML, indeed.
And Sandra, just expanding on that U.S. election risk, we've already started to see a little bit of panic in the bond markets, arguably a little bit of positioning in the dollar as we kind of figure out who the presumptive nominee from the Democratic Party will be if it does indeed stay Biden. Where is the first kind of crack you might look for in the economic data to say, okay, this is something that is now concerning, whether it's before the election or even in the first 12 months after the election? Where might the first cracks emerge?
Yeah, so we've been looking into this quite detailed. So the interesting thing is that so moving into an election period, the quarter before the election and the quarter of the election tend to see lower growth numbers. And that is because private investments are lower because basically everybody's taking a wait and see approach because they don't know what policy is going to mean down the line. And then the other interesting aspect is that when inflation is above target, Republican candidates tend to be favored. And of course, we know that inflation currently is above target. So that is a signal that could help Trump. At the same time, the interesting thing is that what happens with an election of a Republican candidate when inflation is above target is that interest rates are going to rise, and that basically has deteriorating effects on the stock markets of firms. And so you see that when a Republican wins, this is a correlation, not a causation, but when a Republican wins, it means a 13% lower stock market return, while when a Democratic Party wins, it's around a 5%. So, we'll see what happens.
All right, Sandra Flippen, we have to leave it there. Chief Economist at ABN AMRO, we thank you so much for walking us through potentially that election risk and how it shows up not only in the economy, but the stock market as well. Coming up on the program, we switch gears from the U.S. right back here to Europe. French voters and markets gear up for the crucial second round of voting in the legislative elections. We're going to dive into the details next. This is Bloomberg. The answer is?
In the beginning of the war, I think China was sitting on the fence. It was sort of looking around, trying to understand what was happening and why Putin was doing it and what the ramifications are for itself. But as time has progressed, and we're now almost 2.5 years into the war, China has started to provide Russia with different types of aid, not direct military aid, but issues linked to energy, sometimes even dual-use goods. I argue that Russia is so dependent on China right now that one phone call from President Xi Jinping would solve this crisis. If he were to say, time to start negotiating peace, Russia would be forced to do that. They would have no other choice.
How likely do you think that that phone call would be made?
I don't know, but I call upon China to do that. If China is genuinely interested in peace, if China is genuinely interested in harmonious relations between nation states, it cannot allow a country like Russia to drive an imperial, at the end of the day, aggressive and colonial war against a independent nation state. It needs to protect the international rules which are linked to territorial integrity and sovereignty. That is the right thing to do, and that would also show leadership from China. And I think it would get a lot of goodwill, not only from the global south, but also from most countries in the global west, were it to be taking a stronger role in ending this war.
That was the Finnish President, Alexander Stubb, speaking exclusively to Bloomberg about how China could help to end the war in Ukraine. And, of course, anybody takes a look at a map, you know how much Finland knows about relationships with Russia, very long border. We've spoken to him over years before he was president, before he was back in Finnish politics, about the Russian war, and clearly a lot of nervousness in that region.
Well, it's in his interest for China to make that call. Is it in China's interest to make that call?
No, and he admitted he doesn't know if that's at all likely.
Well, precisely, and I think that's where the difficulty lies, and how much pressure can really be applied to China is also a difficult kind of part of this conversation. It's really interesting. NATO is part of this conversation too, and we need to think about kind of as it recalibrates itself to deal with a number of threats, both internal, external, how it deals with China, how it thinks about the interconnectedness of the war that ultimately is being forced on its doorstep, and how China plays a part in that story. But NATO's got multiple challenges at the moment. China's just one of them. Ukraine's one of them. Donald Trump is one of them. What's happening in France is one of them. And it's having to deal with all of these issues right now.
And to your point, they're also trying to involve and take into that China threat, involve the likes of Japan, South Korea, and some of that as well. But to your point about some of the other risks, they're kind of trying to address this and really kind of have a contingency plan, not just for Trump-proofing, but what's going on in terms of the far right in Europe. I asked the U.S. ambassador to NATO, Julianne Smith, this very question. Take a listen to what she said they're planning.
So when we get to the summit next week, we're going to have a couple of different deliverables for Ukraine. One is that we are now here at NATO going to take over the coordination of some of the assistance that's flowing into Ukraine. We've had many years, 2 years, where many countries have come together to offer assistance to Ukraine, and NATO is now going to be coordinating all of those efforts to bring order to all of the generous support being provided to them. NATO is also going to take on the coordination of training. We have a situation where many countries in Europe and the United States are providing training, and now NATO is saying they can coordinate those efforts again to bring greater coherence. In addition to those two initiatives, we will also have most likely a new senior civilian rep located in Kyiv. This doesn't mean that the coordination of assistance will happen in Ukraine, but we will likely appoint someone to manage all of the good work that we're doing with the Ukrainians on modernizing their forces and building their future force from there in Kyiv.
Your predecessors, Douglas Lute, Ivo Dalder as well, the previous ambassadors to NATO, have said that this is a move that basically Trump-proofs NATO. But in addition to doing that, it also protects against the rise of the far right that you're seeing in Europe. From your perspective, how dire is that need right now?
Well, the new initiatives that I just mentioned for Ukraine are actually being put in place so that we can bring greater coordination to all of the efforts that have sprung up over the last 2+ years. It's not necessarily about guarding against political change. I mean, look, the alliance is 75 years old, and it has dealt with many decades of political changes, different administrations coming in on both sides of the Atlantic. So we can cope with that irrespective of what happens. This is about helping the efforts that are being provided to support Ukraine coordinating them and bringing them all together under one roof. And NATO feels like it has some institutional advantage in doing that, since it helped so many members in Eastern Europe transition into the alliance to become full-fledged members over the last 20 years. So modernizing, helping a country modernize its forces is something that we know how to do here in NATO HQ, and that's why NATO is moving out with these new initiatives.
U.S. Ambassador to NATO there, Julianne Smith, speaking to me, on the alliance's continued assistance to Ukraine. But I think the takeaway from that is that institutional advantage that she's talking about. Guys, she specifically says they're moving the folks to Kyiv to talk about a station there and moving a lot of those centralized powers that usually requires negotiating between countries. And now it's going to be put specifically with the institution itself. So in the case, she didn't go on and say this, but the analysis around it is that in the case of a Trump 2.0 or in the case of other far-right parties, NATO is still in charge of that deployment.
I think the move to Kyiv is really interesting, in as much as this has always been Putin's fear, that you ultimately see the creep of NATO closer and closer to Russia's borders. The Russians have always, the Soviet Union always talked about the need for a buffer zone. That maybe complicates that whole idea. And command and control into a more centralised story at NATO headquarters. That's interesting as well. But you've got to remember, it's not just the US we've got to think about. It's, to your reference, what happens with Europe as well. What happens in France? Remember that France withdrew from the command and control structure of NATO in the 60s. Could it do so again? What could happen there?
Andreas Kluth writing a really interesting point about the way that the US administration might behave towards NATO under a Trump 2.0, suggesting that, yes, we can talk about whether there'd be enthusiasm to withdraw, but also any level of boycott that could add complexity. If the US just doesn't wholeheartedly participate, that really risks undermining, of course, the NATO alliance. Let's think about, we've been thinking about where US politics heads. Let's talk about where that French political story goes. More than 200 candidates have withdrawn from three-way runoffs ahead of France's second-round election on Sunday. This as other parties seek to avoid splitting the vote against the far-right National Rally, and so to keep the National Rally out of, at least stop them from having a majority. Bloomberg's Caroline Conan is in Paris for us with details. So talk us through the latest. We got this detail at 6 o'clock French time last night, I know, Caroline, about how these parties are manoeuvring, putting in place this Republican bloc to try and keep the far right out.
Yeah, and it actually seems that the Republican bloc is coming back. At least that's what the former president, François Hollande, was saying on the radio just this morning. Because if you look at all these candidates who came third, who pulled out, 221, according to the latest count from Le Monde. We'll get the final numbers this afternoon, meaning that now the National Rally is in duels in most of the constituencies against either someone from Macron's party or someone from the left wing, meaning that decreases the chances of getting an outright majority of the National Rally on Sunday night. Of course, it is still a possibility. There was one poll showing that that could translate in between 225 and 262 seats for the far right, so just shy of the 289 seats which represent the majority. Now the question is, what is Jordan Bardella doing if he's just a few seats away from the majority? Remember, before the first round, he was saying, in that case, I don't want to take the role of prime minister. But over the past few days, Marine Le Pen has now been saying that if we're just a few lawmakers away, perhaps it's still time to govern. It's still time to take that chance for the far right to govern. So they might still take the role as prime minister and try and get these 15 or 20 lawmakers that are missing to get a majority, perhaps from the Republican group.
So, Caroline, walk us through the vote that we're expecting coming up in a couple of days.
Yeah, so as I was saying, obviously an absolute majority for the far right is still a possibility. The other alternative, of course, is a hung parliament. And in that case, some analysts are saying that we could get a technocratic government like we saw in Italy with Mario Draghi a few years back, with personalities coming back, perhaps outside of politics at the moment, such as the former WTO director, Pascal Lamy. Even the Bank of France governor, Villeroy de Galhau, has been cited elected, as well as the current ECB president, Christine Lagarde, who is not totally out of politics. But some others, like Jean-Claude Trichet, actually do not agree with that scenario.
I think that a technocratic government is not in the French tradition at all. It might be a solution in other countries, namely Italy. What I would expect in case there is no absolute majority by either political sensitivity, I think that the president would probably try to have a coalition government.
Jean-Claude Trichet, former ECB president here, saying he does not believe in a technocratic government. So the only alternative really would be a sort of coalition with some moderates from the left, some moderates from the right, because we already know from the far left, Manuel Bompard, that they don't want to join a coalition unless Macron totally abandons his pension reform, which is obviously something is very unlikely to do. So we could see a prime minister with a center-left personality, the likes of former President François Hollande, perhaps former Prime Minister Bernard Cazeneuve, Socialist MP Valérie Rabault, who has said that she is ready as well to become Prime Minister. We'll see, but it's still very unpredictable vote on Sunday. It must still be a little premature to talk about who is going to be Prime Minister.
Busy few days ahead for Caroline Canan in Paris. Thank you very much indeed. So potentially no majority in France for any party. Here in the UK, we've gone from talking about majorities to talking about supermajorities. We've got the final day of campaigning underway. The general election, obviously, is tomorrow. Bloomberg's Polar poll shows Keir Starmer's opposition Labour Party firmly in the lead, some 20 points clear of Rishi Sunak's governing Conservatives. What does that do in terms of translating into actual seats in Parliament? Well, let's try and get an idea of how this is all going to work. Bloomberg UK correspondent Lizzie Burden joins us now to walk us through some of the possible scenarios.
Good morning, Guy. Well, all the polls suggest that Labour is on course for victory. So the question is, how big will the majority be? Let me take you through those scenarios in likelihood order by the bookmakers. We'll start with the most likely outcome, an unprecedented Labour majority of 250-plus seats. Now, Guy, this was barely conceivable 5 years ago after the last general election, when you'll remember Jeremy Corbyn led Labour to pretty much annihilation versus Boris Johnson's Conservatives. But the polls suggest that this sort of supermajority is what we are going to have. Supermajority, of course, a word imported into the British political lexicon by the Conservatives to warn against untrammelled power for Labour. Starmer, for his part, says that that's a desperate criticism at the last minute. But nonetheless, if they have a majority of this size, Labour would be under serious pressure to be more radical about their plans for economic growth. Bloomberg Economics says that could actually be a boon for the UK economy, because the likes of the Institute for Fiscal Studies say that the plan right now is a bit of a gamble on growth. But let me take you to the next most likely scenario. This is where you have a Labour landslide still, but of a 150-seat plus majority. Now, to put this into historical context, remember back in 1997, Tony Blair had a 179-seat majority. Back in 2019, Boris Johnson had an 80-seat majority. So this would still be a big deal for Keir Starmer, but it would mean that the Conservatives wouldn't go into extinction. So a relief for them at least. Now, let me take you on to the third most likely scenario. This is where the Labour Party only wins a 50-seat majority. I say only. A while ago, this would have been a huge deal before Partygate under Boris Johnson, before Liz Truss's 49-day premiership. But these days, this would be somewhat of a disappointment. I can bet you the headlines on Friday, if this is the outcome, would be along the lines of, what went wrong for Keir Starmer? How did the Conservatives manage to stave off such a big defeat? But let me take you on to the next scenario, even less likely in the bookmakers' eyes, a hung parliament. So Labour does win, but they don't get an overall majority. It would raise the question of whether they would go for a minority government or whether they would seek a coalition with Ed Davey's Liberal Democrats, which then raises the question, what would Ed Davey want to extract in exchange for his cooperation? Would he want, for example, proportional representation, closer ties with Europe? Could Keir Starmer stomach that, or would he go back to the public for another general election? Financial markets unlikely to enjoy that sort of instability. Now, finally, I've thrown in a wild card scenario. This is scenario number 5, the Liberal Democrats becoming the main opposition. It would be a huge shake-up of Westminster's two-party system. Not since the First World War have you had another party in opposition except the Labour Party or the Conservatives. It would take the Lib Dems making serious inroads in southern England into Tory heartlands. It's not likely, but it's not impossible.
Lizzie, thank you very much indeed. Our UK correspondent Lizzie Burden running us through some of the scenarios that could come to pass here in the UK. One of the other aspects that we're watching in the UK is less to do with kind of the totality of the seats, the big numbers. Sometimes you need to focus on individual constituencies, and one of those constituencies you need to watch out for is the one that is being contested by Nigel Farage of the Reform Party. The Reform Party sees itself as achieving a beachhead in the upcoming election by placing Nigel Farage in Parliament. They see things developing from there in quite a significant way. I spoke yesterday to the Reform donor and quite active participant in this process, Zia Youssef, to get his take on what could be achieved in this election and potentially subsequent elections.
Reform have gone from, in October 2022, Reform are polling at 4%. They're now polling at, again, at 15, 20 odd percent. We think we can get that up to 40% in a reasonably, with some resources, with some infrastructure, with some time, none of which really the party has had. And so I actually think, again, as a startup person, when I saw how much this party under Nigel has been able to do with such scant resources, frankly, again, in all of those things, it makes me extremely confident and optimistic about what the party is going to be able to achieve over the next couple of years. And that is what we're focused on.
That was Zia Youssef, Velocity Black founder and Reform UK donor. If it's a beachhead they're looking for, Clacton certainly has a beach. So we'll see what happens with that one on Friday morning. Coming up on the programme, we'll get back to stock markets and the stocks that we're watching this morning, including the French drug maker Sanofi, after the EU approves the company's Dupixent drug for lung disease. We'll get details of where that share price might move at the open. This is Bloomberg. Welcome back, 7:51 here in London. The futures picture points a little higher after another record close on Wall Street yesterday. Joining us now, Markets Live Executive Editor Mark Cudmore. We see the positivity then, Mark, going around the globe into the Asia session, probably coming through to London a little further. But we have a holiday-shortened week to deal with, and data dropping at strange times, and data dropping perhaps in a market that doesn't have all its participants at their desks. What's your expectation for stocks as we end this week?
Good morning, Anna. The overall backdrop is still extremely bullish for stocks. We still have solid growth, not stellar, but solid. And that's kind of that Goldilocks scenario. We still have central banks that have that dovish reaction function. Earnings are still good, and there's a lot of liquidity out there. So the backdrop's very, very strong. With the low liquidity, we do have quite a few short-term risk events, though, that might cause volatility. And while I say the backdrop is very bullish, I am getting more alert for the potential chance of a turn in the narrative on the economy. Many people are pointing to some signs of weaknesses in the labour market. I'm not too... Well, we had jolts yesterday. That's backward-looking, so I can't dismiss the slightly more positive take there. I am watching non-farm payrolls this Friday very, very carefully. If the unemployment rate ticks up to 4.1%, it does trigger a modified version of the SAM rule. Our colleague Simon Flint's written about this, that normally has produced a pretty reliably negative signal on the US stock market. So therefore, I will be watching unemployment this Friday. I'm not expecting it to be an above consensus print, but if it is, that would make me wary and start to change my narrative.
Mark, why is the market paying so much attention to Jay Powell? Jay Powell keeps confusing us, maybe sending us down the wrong path. Yesterday, once again, Powell sounds kind of confident on disinflation. Are we listening to him? Are we not listening to him? Should we be listening to him?
Look, we just don't change habits here very easily. Obviously, we should give him some attention. But I think it's correct, the implication, the question that we're giving him way too much weight. Ultimately, it is data dependent. What he has emphasized, though, is still important. He's emphasizing the dovish reaction function. And I think that is very, very clear. And he's saying that dovish reaction function has not gone away. What is telegraphing to the market is they will cut as soon as they are given permission to by the data. At the moment, though, the data is saying not yet and not soon.
All right, Mark, very quickly, what happens to euro dollar on Friday?
Oh, on Friday on the jobs market? Well, look, I said I'm not expecting a bad labour print. I'm wary for it, but I'm not expecting it. And therefore, I don't expect immense volatility. I do think if we get a high unemployment print, that 4.1% unemployment print, then we get a period of risk aversion that I think that will lead to dollar strength and retrenchment. Remember, then it's going to the French second round. We talked about last week about how it would be hard for the first round of the French election to lead to a negative story, but ultimately the French story is a long-term negative one, and the election has brought focus on that long-term negative fundamentals. So I do think that after the second round, it's hard to get a good scenario, and I think that any kind of rally will be faded. So some point after the weekend, I am looking for euro dollar to top out and start drifting lower in the weeks ahead.
All right, Bloomberg Markets Lab Executive Editor Mark Cudmore, we thank you so much. To get more from him and the team, just type in MLIV Go on your Bloomberg terminal. The European markets open is up next. The futures are pointing higher. We're going to walk you through it. This is Bloomberg.
Wednesday the 3rd, good morning. 2 minutes to go until the start of equity trading here in Europe. Let's talk a little bit about where we are vis-a-vis the US close yesterday. The US close yesterday higher than the European close. We therefore get some positive momentum from that story. You have to price that in. We're also watching what is happening in France as well. The market sees what is going on there as positive. We're going to see French stocks, I think, probably rallying on the back of that. So the kind of momentum today is to the upside. But remember, we're also potentially taking risk off. We're running into a US holiday. We've got the French election coming up. We've got some big data that's going to be dropping with limited liquidity. All of that might make traders a little bit more cautious. So factor that into your thinking as well, Kriti.
Trade's cautious, but that's kind of the trade we saw yesterday as well, because on the flip side of that, sometimes light liquidity, light volume means that stocks are a little bit on autopilot. Anna, when you look at the futures picture right now, you are seeing that exact positivity Guy was talking about, a lot of it driven by what you're seeing in French stocks. That index higher by 0.7% on futures trading. Euro Stoxx 50 futures higher by the same amount. FTSE 100 still significantly green on the screen. Yeah, so green on the screen for futures across Europe. We'll certainly keep an eye on that French market. Sanofi could be in focus, getting clearance for Dupixent as a lung cancer drug. We'll also watch Rheinmetall. That's an interesting one. That's on the board as well. This on the back of a report in Handelsblatt in Germany that suggests that Italy could be buying some tanks from Rheinmetall. We'll dig into that story, but Morgan Stanley also has an overweight recommendation on that stock, so we'll watch it for two reasons. And insurance companies, they dropped yesterday on fears around insured losses connected with Hurricane Beryl. Looks like it's heading to Mexico, though, so we'll see what happens with that. Lower insured losses there, obviously, than in the United States, Guy.
Plenty to think about as we get into trade this Wednesday morning. Here we go. It is time for the opening trade. Europe is opening up. We've got a lot of politics to price in once again. We've got some single stock stories to price in. We've got what's happening over in the United States to think about as well, and the message we're getting from central bankers as we wrap up the Sintra story as well down in Portugal. So a lot to fold into the markets this morning. As Kriti was indicating, it looks like the FTSE 100 is opening higher. Is the FTSE 100 going to do better if we see political turmoil elsewhere? Some evidence for that. There's an interesting story on the Bloomberg talking about that story as well. DAX looks like it's opening positive as well. The Stock 600 is up by 0.2%. As ever, we wait for the French market to load, and there it is, up by 0.5%. Maybe not actually significantly outperforming thus far on the back of maybe an easier political narrative for the markets to digest. That's interesting in itself. So we'll see how the French market tracks its way through the rest of the day. So Europe is open. We are up cautiously higher, I would argue, Kriti.
I think that's the fair assumption. And when we look at the French index, I'm going to start there, given the political turmoil. We are seeing slight underperformance, but still green on the screen. Of course, led higher by your luxury names, but also energy, Anna. Total keeps continuing to make gains, for example, not just in the French index, but it's a theme you're seeing in the FTSE as well, because the leadership there, alongside your ASMLs, your big heavyweights, is your oil companies.
Yeah, absolutely. And the oil price, 86.74, as you point out, we are seeing a little bit of upside there. And that I was looking at that earlier. It does stand out in the GMM, that size of a move. So it has got some scale to it. So that could be something we watch. But energy names actually pretty flat this morning, just a tenth of a percent. Focused on those basic resource stories, though, Kriti, and we do see that sector doing really well this morning, up by 1.75%. Antofagasta, Rio Tinto, both higher. We saw iron ore prices up by more than 3% through the Singapore session, so perhaps that having something of an impact.
Well, when we look at the... Go ahead, Joe.
Sorry, no, go.
Oh, I was going to say, for some of the individual movers that we've got our eye on, again, it's the heavyweights that really catch my eye, because ASML, again, is going to be one of your biggest index contributors. You can already see one of your best performers on the Eurostoxx 50 right on your screen there. But to the downside, it's also a tale of heavyweights. Novo Nordisk, for example, dragging the index lower as well. That likely coming from the Biden guidance overnight, saying that they're actually going to be looking at the pricing for the likes of Ozempic and Wegovy. That is significant, because remember, it's a big part of his drug pricing agenda. And I think a massive amount of that obesity drug, the consumer demand, comes from the States. So if you can't make that kind of margin, that's going to hit your bottom line. Novo Nordisk taking the hit this morning.
I don't see a trade yet in Rheinmetall, which I think is interesting. 550 tanks. This is the Panther tank, the new tank that this company is producing. It looks like Leonardo potentially is going to be involved in that trade as well. So we're waiting maybe for that to open and give us an idea of how the market is going to take that story. Plus, we've got an upgrade on that stock story as well. So we'll keep an eye on that. That's certainly going to be one of the single stock surprises maybe out of today's session.
And just as you speak, I think we are getting those opening trades higher by 1.9%. But again, light volume, just starting to trade, so we'll bring you the update there. But as we walk you through some of those individual names, it is still that macro overhang we're talking about. We're talking about the geopolitics, but monetary policy absolutely matters. Yesterday in Sintra, we heard from both Powell and Lagarde. Take a listen to what they had to say.
We want to be more confident that inflation is moving sustainably down toward 2% before we start the process of reducing how tight our policy is, of loosening policy. Frankly, because the U.S. economy is strong and the labor market is strong, we have the ability to take our time and get this right, and that's what we're planning to do.
We still believe that it's likely to be a bumpy road until the end of 2024, but we still have target at the end, in the second half of 2025, on the basis of our projections, and the baseline is unequivocal on that front.
Jerome Powell and Christine Lagarde, they're speaking at the ECB forum in Sintra. Let's get a little bit more analysis here when it comes to the markets. Emma Wall, head of investment research and analysis over at Hargreaves Lansdown, joins us this morning. Emma, pleasure to have you on the program. Good morning. Let's talk a little bit about this macro story. We hear the same narrative over and over again from Chair Powell, from Christine Lagarde. I'm not sure we necessarily learned anything new. When it comes to how that shows up in the stock market, is monetary policy priced in?
I think some monetary policy priced in. I actually think markets at the moment are reacting far more to political fever, and we can come back to that. You know, it has been very much over the last 12, 18 months, markets that have been driven by expectations of what happens with interest rates. You know, lest we forget that at the end of last year, we were pricing in 6 cuts for the Fed, several for the ECB and several for the Bank of England. Those didn't materialise. But I think what we have heard from that rhetoric, I know you're saying we're learning nothing new, but that is what central bankers are trying to do here. They're trying not to surprise markets. They're trying not to scare economies, because there are so many levers at play. I thought it was very interesting what Powell said about the robust economy for the US. We are still seeing growth in the US, but some of the jobs market figures are actually looking softer. I thought it was a really interesting report that came out from BOA last week that actually showed that salary rises through when people move from job to job have actually softened, come off from where they were 6 months ago. So obviously that wage inflation is softer. That will flow through to inflation. So I do think consumer remains robust and the jobs market remains positive. But some of those inflationary pressures are easing. And so that will then pave the way for the Fed to be able to make cuts in the second half of the year.
So that's the monetary story. But when we talk about the Fed and then the ripple effects into the economy, does geopolitical risk play a role here, or is this something that's largely seen as temporary?
Well, I'm going to be really selfish about this because I'm obviously talking to you from the UK, and we have absolute election fever here at the moment. And if you think about what's concerning our clients and indeed what's wobbling the market, it is very much the fact that polls are going to open in the next 24 hours, and very much in France. You were discussing it earlier. What's making markets wobble? Well, expectation of what happens with Marine Le Pen's party and the prime ministerial role that will be resolved next week. So although monetary policy still drives markets, I do think for the moment, at least for the next 6 months, and we could come back to Biden, you're probably far better versed on that than I am, being US, but geopolitics does play a part, at least in the short-term volatility. And we've been looking at some of the sectors that will be impacted by the UK election if the expectations are correct and Labour does win the election tomorrow, what that does for certain sectors. And also we've been hearing from our clients, and it is something we've been getting a lot of incoming contact on, how will an incoming Labour government impact not just my investments sector by sector, but also my finances, because of course there are tax implications to an incoming government as well.
Yes, I should point out, Kriti's here with us in London, Emma, here with us in the UK, as I know you are. So she's living the election fever, as you describe it, to the extent that we have that with us at this point. Thinking about where the fever is, I mean, markets seem more animated by the French story at this moment because a lot of what is set to happen in the UK seems as if it might be priced in, Emma. Is that true for the oil and gas sector? I'm thinking here of smaller names that maybe have been more volatile already around what the Labour Party would plan to do with the North Sea. What conversations are you hearing on that front?
Yeah, I think that's one of the really interesting sectors that we are seeing an impact. There have been elections before where actually parties are really aligned on policy and it doesn't really matter sector by sector who gets in. But oil and gas and a Labour government is very different to oil and gas and a Conservative government. They have very much indicated that no new licences, will be awarded to oil and gas. They've made noises about additional windfall taxes. They are very much committed to accelerating the net zero plans. So companies that are involved in electrification, diversified oil and gas companies who were perhaps investing in renewables. We expect there'll both be a carrot and a stick when it comes to the net zero policies. So oil and gas is one of those sectors that we do expect to see an impact.
Yeah, and whilst the big names listed in London, of course, have international businesses, some of the smaller ones will be more exposed to those dynamics that you described. Let me ask you about your expectations on the Bank of England, Emma, because I know that there is an expectation that we get an interest rate cut at some point this year. I was looking at a note from Deutsche Bank yesterday, though, talking about risks to the upside for the UK economy. Growth has come in better than expected. Investment may be encouraged by political stability. Balance sheets and real incomes for UK consumers have improved. Sentiment improving for consumers and businesses. I wonder if there are upside risks to the economy and therefore how certain you are that we get that cut from the BOE.
I love to be in a position that we are worried about being so optimistic about the outlook. It's been a while since we felt that about the UK economy. I think potentially that's overstated. There's still considerable negativity baked in. We are on a significant deficit. There's a lot of debt in the system, both in terms of corporates, the economy and consumers. Although interest rates are looking to come down, they're not coming down yet. And we have got a number of loans that we expect for corporates and consumers to be rolling off in the next 6 months at considerably higher rates. So there is still quite a lot of risk in the system. I think the pressures on the Bank of England, now that inflation is at target and you do have that debt burden across those three spheres, will be to cut rates in the second half of the year. So our expectation is very much that rates will come down.
Emma, good morning. It's Guy. Can I take you back to the UK and figure out maybe in a little bit more detail what is happening here? We've talked already in this conversation about kind of the risks elsewhere and what is happening in France, potentially what's happening in the United States. Does the UK look like a sort of bastion of stability right now? Does the FTSE 100 look like it has that kind of those characteristics? Does the UK market outperform when others are doing less well in terms of the kind of the political narrative? How should I think about the UK versus Europe?
I think there are a couple of factors at play here. Firstly, let's strip out the geopolitics and just look at fundamentals. Although the UK market has done better this year than it has done in previous years, even outpacing the S&P 500 for a section, we still believe that the UK stocks are significantly undervalued. We've talked about this before. looking at a fundamentals point of view, on a cyclically adjusted PE, UK stocks are still undervalued, and yet they've got low levels of debt, sometimes high levels of cash, and well-covered dividends in a lot of cases. So if just from sort of a longer-term fundamentals view, we're still pretty positive on the UK. From a relative point of view, I do think, this is anecdotally, I've been talking to clients looking at asset allocation who've been saying actually they've been waiting for political stability, which we haven't had in the UK for quite some time. It's been a high tempo 5 years, shall we put it, in terms of change in politics. They're looking for stability in order to take advantage of those fundamentals. So they can see, taking all emotion out of it, but this has potentially got some great upside. But they've been waiting for that political stability in order to make that investment. So I do think the two factors together do make us quite bullish on UK. What I would say, however, is I wouldn't count the European market out. I think France in particular is interesting because we have got an example of a right-wing, indeed female leader in Italy, which people were very worried about the sort of policies that they would bring in, that government would bring in. But actually, politicians aren't stupid. There are some policies which would significantly disrupt the French economy and indeed upset the ECB. But I would expect actually for them to play the long game. And so there is then about politics with a small p and how that comes into play and how much of the rumoured and concerning policy does actually flow through if they're successful in the prime ministerial race.
I'm going to stick with the UK, if I may, for just a moment. Capital gains tax. How worried should I be? Should I be selling today if I need to maybe think about if I think the capital gains tax is going to go higher? Are you seeing that? What are you advising clients right now? There is a lot of ambiguity around what a Labour government would do on this.
Yeah, so I think capital gains tax is one of the personal taxes that Labour hasn't ring-fenced. So they've been quite vocal about the fact that they won't be adjusting income tax limits. So capital gains is kind of the elephant in the room that they haven't addressed. And we do know that they're going to need to raise money in order to fund some of the initiatives that they've already spoken about. The first thing I'd say is none of this is certain. We very much expect a budget to happen in September, and we always ward against acting in haste and repenting at leisure. What we would say is take advantage of the allowances that are available to you now, both in terms of pension, personal allowances, and do start to think about if you have done well, perhaps now is the time to crystallise some gains and to reallocate. But we'd also say investing should be for the long term. We've done some analysis on how your money would have done under Labour and Conservative governments, and actually the best way to invest your money is to be politically agnostic and focus on the long term, because actually the best gains were made through both periods of kind of leadership and just focused on the long term.
Emma, thanks for catching up with us. Emma Wall, Head of Investment Research and Analysis at Hargreaves Lansdown, joining us ahead of tomorrow's election here in the UK. Let's take a look at some of the core stocks that we watch here in Europe to give us an idea of what the market really is doing. And as you can see, broadly positive. Nestlé a little bit softer, but not by much. Novo Nordisk, unsurprisingly, given the politics coming out of the United States, a little softer as well. But elsewhere, we see some gains. LVMH, Ferrari, ASML, Schneider, all picking up, Anna.
OK, let's check in on the individual stocks on the move this morning. Joe Easton has a briefing for us. Joe, good morning.
Morning, Anna. So I'm going to start with the morning calls today because these are what's driving the big movers on the gainers today. Take a look at this one, BE Semi. This is upgraded over at Morgan Stanley today. In a note, they're saying that they suspect Apple might start using the Amsterdam-based company's technology. This is the chip manufacturing machinery firm, and as such, a 5.7% gain in that one. Morgan Stanley has a 190 price target. Plenty of upside on that stock, and that's the best performer on the Stock 600 this morning. We've also got a couple of morning calls in retail, a couple of very different calls on these shares today. Firstly, we're going to take a look at JD. Now, this is the only sell rating on this stock, and it's coming from Barclays following the weak earnings from Nike just a week ago. That viewers will remember sent JD Sports lower, and Barclays putting out a warning saying this is a signal for the company. Nike accounts for around 50% of the firm's revenue, so that one is dropping on the FTSE 100 today, down 3.8 this morning, a bit of downside in that stock. But going the other way is H&M. This is the Swedish retailer, the discounted retailer. This one is upgraded over at Deutsche Bank. They say investments in the company stores and also some newer brands that they're bringing out are going to boost that company. It's a double upgrade today, going to buy on that stock, and we're up 1%, 200 200 SEK price target, so a bit of upside there as well. Then we're going to look at Rheinmetall. Anna mentioned that one earlier. We've seen that deal news in Handelsblatt, potentially 550 tanks being sold to Italy, getting a decent gain on that one, up 3%. That's a stock that's doubled in value over the past year. We've also got, though, the Morgan Stanley upgrade that you also mentioned earlier, so double boost for that one today. Rheinmetall rising in Germany this morning. We'll take a quick look at Sanofi. Not too much movement, but the company's Dupixent drug has been approved for chronic lung illnesses overnight. That's coming from the European Union, the US and Japan also looking at this drug as a potential treatment for lung illness. It currently is a treatment for asthma and a couple of other drugs as well. It does around $10 billion already in revenue, potentially a boost for Sanofi. We'll check in on insurers. A big drop yesterday, very exciting. The insurance index did have the worst day in around a year following the tragic news of that hurricane that has spread now, but has been downgraded to a category 4 instead of a 5. But we are seeing weakness again. All of these stocks fell around 5% yesterday. Zurich, Swiss, Hanover Re and Munich Re all weakening once again today, but not as much as we saw yesterday. Then in terms of your deals, we got a few in the UK this morning. One of them was Anglo American, potentially looking to sell that mine over in Australia that saw that fire earlier this week. That could potentially be part of the BHP deal that fell away. Keywood Studios, finally confirmation of the takeover for the video game designer firm. And Vodafone is doing a pact with Virgin on its telecoms network. And finally, down the bottom here, we got GlaxoSmithKline as well. That one coming in late. It's to do with their vaccines on COVID and also some other respiratory illnesses. That one's a deal with a US company. Not too much movement in that one, but plenty going on in the deal space this morning.
Yeah, there is plenty going on. It seems to be creeping back up as a theme, doesn't it? We'll remember to check in with the various banks we'll speak to around earnings season on that theme. Joe, thank you very much. Joe Easton from our equities team. I mean, absent, there is some deals flow, not talking about big deals, massive deals here, but there is some deals news to talk about, I guess, and that is a theme that we'll continue to revisit through 24. But in terms of where we are right now, basic resources still the best performing sector, up by 1 3/4% this morning.
So what is that on? Is that just on... I can't see any better China data that would give that sector a lift.
Yeah, I mean, the iron ore price was higher, but why? Yeah.
Not really.
NI Ferro. I'm calling up right now. Talk amongst yourselves.
This is us trying to maybe post. I love it the way we apply sort of narratives. Kind of. Let's try and we've got a stock move. Let's try and figure out a narrative, and we'll pin it to it.
Well, I'll give you one. Look, we talked about this at the open. Light liquidity, light volume going into it. Sometimes that just doesn't mean green on the screen. It just means everyone's on autopilot. People aren't necessarily taking cash in or out, and we already saw it. Last week, of course, with the rebalancing, and we saw it yesterday as well. There was a little bit of a sell-off. So I feel like maybe people are positioning for the U.S. to be out tomorrow, and more of the excitement will happen on Monday after we get that answer from the French.
It is a slightly complicated market, as we saw yesterday, with NVIDIA not playing in the rally much, other techs playing, Tesla certainly playing, and we'll certainly get to that Tesla conversation next. It was supercharged in session yesterday. The EV maker extends gains after second quarter deliveries beat estimates. More on that next. This is Bloomberg.
...22 minutes into the equity market session this Wednesday the 3rd, and European equities are tracking a little bit higher this morning. I think there's a few kind of interesting elements to what we're seeing in the market this morning. Keep an eye on what's happening with Rheinmetall. That stock story definitely up on a Handelsblatt report suggesting the Italians are about to buy a lot of tanks from the German manufacturer. That is a story for the DAX. But broadly, we're up kind of 5, 6, 7 tenths of 1%. There's a legacy story coming out of the United States, which is interesting as well. And a lot of that driven, in some ways, by Tesla. Tesla shares jumping. Deliveries for the second quarter beating estimates. Estimates weren't that particularly high. Let's kind of park that one as well. Option traders are betting the EV makers. Recent rally has more to run. And it's been a decent rally over the last few days. One of the longest rallies we've seen for Tesla in recent memory. Let's bring in our transport reporter from Hong Kong, Danny Lee. Danny, expectations weren't particularly high. The numbers were better, but are they really that good?
Yeah, the numbers were better by not that much, but given everything that has happened to Tesla over the recent months and the kind of downward pressure that we saw on the potential sales, this is a good number overall. And when you look deeper into the numbers, you look at some of its other businesses, such as energy storage, that really outperformed. And so therefore, when you do see something fundamental like the EV business kind of failing or slipping up, you do have other sectors which are helping Tesla regain some momentum. And we'll see more of that in a couple of weeks when it releases its second quarter earnings. But everyone is looking out for August 8th, and when Elon Musk has more to say about the robotaxi and what exactly the rollout and the timeline is of that, because right now Tesla has a frankly stale lineup, and that's always been the criticism, and so therefore what happens next month is going to be very key to just how much the share price has to run in terms of room to grow.
Yeah. Danny, I was reading a piece this morning by our colleague Liam Denning, an opinion piece that says only Musk's robotaxi can save Tesla investors now. Is that a view widely shared, or is the robotaxi not quite so core?
I think the robotaxi is very much fundamental, along with this AI story that Tesla continues to champion. So, more details, more kind of concrete timelines of what this robotaxi will do and at what scale and how quickly is going to be very important, because this is all going to feed into the share price and potentially their earnings. But the criticism has always been Tesla is acting too slowly to react to the broader market.
So, Danny, let's broaden this conversation out. Provisional tariffs between Europe on Chinese EVs kicks in tomorrow. What does that mean? Is there talks going on? Walk us through what we need to know around that story.
Yeah, there is talk still going on, and whether we see some of the tariffs that were kind of guided towards from last month published as they are, that wouldn't be a surprise. Do we see anything at all would be another question. That would be a surprise if we don't see any tariffs being implemented. But the key thing here, there will be an implementation, but no money changes hands here. We've got to wait another 4 months before the tariffs really kick into effect when it comes to the real cost mounting onto automakers. But as we wait at the moment, China is still putting a lot of pressure on certain countries, namely Germany, who has a lot to lose in these kind of EV tariff wars, that China really wants someone like Germany to really use their weight to try and convince the European Union to step back from what would be punitive tariffs. And China still has its own kind of retaliatory measures that it could still wield out on sectors such as cars with large engines, which would directly affect Germany, could do so for dairy, agriculture, pork. So it's really a wait and see until what kind of measures that the Europe and China would both be happy with.
All right, our transfer reporter Danny Lee walking us through what those dynamics in the EV space look like, and broadly between China and the read-through into Germany. That's likely something we're going to be discussing. You do not want to miss our exclusive interview, by the way. We're going to switch topics with Jose Manuel Campa, the chairman of European Banking Authority, coming up next as he discusses their spring report. That conversation coming up. Stick with us. This is Bloomberg. This is the opening trade. We're 30 minutes into today's session. There's a lot of individual movers, but I think net what you need to know is you are seeing green on the screen across the major indices. When you look at the breakdown of the Stock 600, to me at least, it is a tale of two heavyweights. It's ASML on one hand, really taking their lead from that tech rally in the States overnight. And then on the other hand, Novo Nordisk, as we kind of pulling it down. A lot of that perhaps concerning around Biden's comments around the Wegovy and Ozempic pricing. So those are just two stories that we're keeping an eye on. And we've also got our eye on the bank story as well.
Yeah, we do. And I noticed the BE Semiconductor is the best performing, and that takes us to the tech story you were referencing. But on to banks. The European Banking Authority has called for caution amid rising geopolitical risks. In the spring report from the EBA, they also highlight elevated economic and interest rate uncertainty for the banking sector. Joining us now for an exclusive interview is Jose Manuel Campa, the chairman of the European Banking Authority. Very nice to have you with us. Thank you for coming to speak to us here on set in London. So I wanted to, we've got lots to discuss. Let's go to the CRE, the commercial real estate market first, if we could, and risks there. Is it your sense that we will start to see losses crystallise for the banking sector in this space as deal volumes pick up? Some people are talking about we're seeing more deal volume, and as a result, we're going to get some price discovery.
Yeah, I think that's absolutely the case. In fact, I would say that we should not expect that that's already happening. You know, in our report, we highlight that the increase of non-performing loans on that part of the portfolio of the banks has been the largest, and it's likely to continue to increase going forward. We think that this is a trend that is not going to be in the short term. It's likely to be also medium term because there are structural changes in the commercial real estate market. Commercial real estate is a very broad definition. It includes many different things, so you have to be a bit careful. But in general, you know, we would expect that there is price discovery and price alignment in the medium term.
So you expect that to continue. Is it in danger of worsening? Because some colleagues tell me that perhaps the banks are selling some of their better commercial real estate assets first, and that perhaps doesn't do too much damage to valuations and balance sheets. But as we get through this process, they'll have to sell some of the other stuff that it doesn't look so good. Would that be your expectations from dealing with the banking sector?
That's likely. It's likely that will evolve. Again, it's a diverse sector, so it's hard to predict one by one. But one thing that's characteristic of commercial real estate is that they tend to be bullet loans, so that most of the principal gets paid at the end, while in the interim they're just paying interest. So most of that restructure will take place as that loan becomes due at the end of the period, and it has to be repaid, and the inability of that commercial real estate agency to repay, that will lead to probably sales or restructuring. That's why I said before it's likely to play out throughout the middle term.
OK, tick. We've done one of the three big risks that we need to talk about. Anna's done the CRE risk. I want to talk about what's happening with the private lending story. Bank of England Financial Stability Report out last week, and this is a quote from it. Vulnerabilities in the private equity ecosystem could amplify shocks and disrupt the stable provision of finance to the real economy. The Bank of England is a little concerned about what it doesn't know, really, I think, about what is happening when it comes to banks lending into the private markets and the level of activity that is taking place here. All of this ultimately to a group of companies that are highly leveraged and quite vulnerable. What do you not know at this point about what is happening here? Because it seems that it's the lack of transparency that I think is causing regulators concerns.
I think you're right. I mean, first, let's start with what we do know. We know that the private credit market has been growing a lot over the last 5 to 10 years. That's a fact. We know also that part of that growth has been driven probably by increased regulation in the banking sectors that have been transmitted there. We do know, and we publish in our report now, because we focus on this area as a key area of concern, what are the direct links between the banks and the non-banks. So we do know, for instance, that it's about 10% of the asset portfolios and 10% of the liability portfolios of the banks that are engaging with these non-bank financial institutions. To some extent, it's normal. They're a big part of the economy, the financial institutions, so that's okay. The part that we don't know is what goes on afterwards from that direct link between the bank and the non-bank, how the non-banks are interacting with other non-bank financial institutions or ultimately with the ultimate borrowers.
Yeah.
And that's the part that I think we need to understand better and have more discovery. We've been calling for, enhancing the reporting requirements, the disclosure requirements of this part of the sector, just to have a better assessment. I think the Financial Stability Board, beyond just the banking sector, looking at the global area and all financial institutions, will also start working on this. And I think it's a first step that we need to find out. We need to find out how the interlinkages work.
We are effectively we're seeing a lot of financial engineering in this space at the moment. And the reason for it is that I think private equity, private credit, struggling to make the returns that it normally would. So they're kind of figuring out new ways and new ways of generating the returns that they need. Financial engineering generally creates more instability. Would you say that instability is growing? Is that a reasonable thing to assume that as this process unfolds, it becomes more unstable?
Yeah, it's hard to know that it's growing because I said we don't know the linkages.
Fair enough.
But it's important to at least assess and reassure ourselves that financial stability is not growing because, as you said, in the past we have had the experiences in which financial engineering, financial innovation led to apparently what was more risk diversification, but ended up being actually really being vulnerabilities for systemic risk. And that's the part that we need to assess.
Does the perhaps backlog of the private capital markets that Guy was just referring to, it feels like the solution at the moment is just have capital markets activity pick up, right? The buyout exit should be this easy solution. Would that relieve you of some of the concerns around the private markets if you saw a pickup in something like M&A activity or IPO?
Well, if it was more transparent, we had a better understanding of how that private credit is being allocated because there's more information. Let's say if they go through a acquisition of a publicly traded company that requires information provision, more disclosure, that would be helpful over time. I think so.
And then put that into the context of things like the Basel III rules, for example. The U.S. is really pulling back on some of the more strict banking regulations that they had or were attempting to have. Jamie Dimon, of course, leading the charge on trying to pull those back and successfully doing so. How does Europe catch up to that? How does Europe compete when there's that deregulation element in the States?
Well, actually, so far, the message that we have received from the United States is that they're still willing to continue to be loyal to Basel, to implement Basel in a faithful manner. They're just going through the process, trying to work on the details and the timing when they're going to do that. In fact, what we have done in the European Union, the European Commission announced this 2 weeks ago, is we have delayed the implementation of one part of the Basel package, which is called the Fundamental Review of the Trading Book, which is basically the part that affects market risk, which is the one that's probably more linked to global markets, to level playing field. You know, we have delayed that for a year until now, January 2026, on the expectation that there will be a coordinated and timely implementation by all major jurisdictions.
Isn't that a risk, though? The United States can do that because the economy is roaring, because the banks are resilient, the consumer is resilient. You can't say that about Europe. Does that put Europe more at risk that they've delayed that cushion that's needed in some of the European banks?
Well, our assessment for the risk assessment reports is that the banks at this stage are solid. You know, they have good profitability, European banks, they have good levels of capital, good levels of liquidity. So that's a good starting basis. It is true that it's a reform that enhances the prudential requirements of the banks in this part of market risk, and we want it to be implemented as soon as possible. So in that sense, you know, we're moving to a better system. So that's enhancing this sustainability of the system overall. But I would not say that at the current circumstances, we're really putting the bank system at risk. We're just making sure that we're facilitating that smooth transition while preserving open global financial markets.
What is the concern around geopolitics specifically? Because we can all see how life might become more difficult for European banks doing business in Asia. We can all see how perhaps the rise of right-wing populists might lead to more calls for taxation on the sector, for example. Yeah. Where is your focus when it comes to geopolitical trends?
Well, as you said, it's very hard. Geopolitical trends, they come from many different varieties and have many different impacts on the economy. So what we put in the report is this has been clearly increased. Banks need to be aware of it. They need to act on it. To us, this implies more that the way they think about the risk assessment has to change a little bit. They need to think more in terms of potential scenarios that may happen. So pick any one of those that you chose and think about how that will filter into their business model going forward. And as a result, what are the actions that they would need to take? It's no longer thinking so much about what's happened to GDP growth and employment or regular economic variables and how you manage that, but more maybe you need to think about inorganic actions, things of that sort.
Because you put this high up on the report. This is the biggest risk you mentioned on the report.
Picking up on what Anna said, though, Europe feels like it's being more fragmented. You talk about this. Does the regulation Europe needs for its banking sector feel further away because what's happening in France? Does it feel further away because of the fragmentation that Anna's talking about? Does what Europe needs to happen next seem more difficult to you today before we go into the second round of the French election?
Well, what's more difficult was the challenge, as you said before, is that, you know, the trends in politics tend to lead us within Europe to the possibility that there is a less Europe project going forward. And that's obviously in contradiction with keeping.
You think the banking sector
markets.
needs more Europe?
Of course. Of course. One of the crucial challenges that we have, as you know, since we created the banking union of the last 10 years, is that although there's been this creation of the banking union, the degree of cross-border banking activity has not been increasing, and that's a challenge.
That's something that we've heard from Emmanuel Macron as well, in terms of encouraging that kind of consolidation. And yet, the inclination is still to do more domestic deals. We're seeing that, I think, most recently with BBVA and the bid for Sabadell, for example. But there is still that inclination to stay domestic. How do you incentivize those kind of cross-border deals?
Well, we need to make the underlying regulation, the underlying economics work for the banks. You know, I believe that the
banks have pushed back on that.
I agree, and it's the message that I hear from the banks as well. It's a source of concern for us, and if I might say, an encouragement for future work, because we want to make sure that the system in a single market, you know, there is the ability to be able to do cross-border banking, to diversify risks, across the whole economy and to provide funding in different countries,
But that's getting harder. You don't see that getting easier. You see that getting harder.
I would not say it's getting harder, but it's not getting easier.
The politics, do you think, no, okay, so...
the politics, yes. The politics is likely to get harder.
Okay.
But if I might say, we went through a process of European elections 4 weeks ago, in which the expectations was that this was going to become much, much harder. We ended up with a European Parliament that still continues to be in a majority of the political groups in a pro-European stand.
So that's the politics, but there's an economic component to this as well. It's the transmission of the interest rate mechanism, right? This is a concern in Spain that it can't go fast enough. If there is more consolidation, you can't get it to lower interest rates to the savers fast enough. Does that more fall on the ECB's transmission mechanism than the banks themselves?
Well, there's a challenge for the ECB. They need to assess how the transmission mechanism works in the different countries, given the different market structure. That's absolutely true, and they look at that carefully, I think. And they assess that. The evidence that they provide is that transmission mechanism still works well. And, of course, in the deal that you mentioned of BBA Sabadell, there's a competition aspect that's up to the competition authorities that they need to assess, and they haven't come forward with a report yet.
That was really interesting. Thank you very much indeed for stopping by. I think we went through all of the major risk factors, and we'll throw in some politics as well. I guess you flagged the geopolitics up there, right at the top. Jose Manuel Campa, thank you very much indeed, the chairman of the European Banking Authority. Talking of politics, final day of campaigning ahead of the UK general election, which feels, compared with everybody else's elections right now, a bit of a snooze fest. But maybe there's some interesting aspects of this story that we are not focusing on. Let's talk about how business is going to see this election. Sam Gyimah, a former Conservative government minister who later joined the Liberal Democrats and then joined the City of London, is going to be joining us next. This is Bloomberg.
For us is obviously looking at how do we maximize trade with the European Union in a sensible way, how do we make sure that we keep our population, we essentially have sovereignty for the British people. That is really, really important, and we will not compromise on that. But do we want to have great trade relationships with Europe? Absolutely. By the way, we also want to continue to have great trading relationships with the United States and a lot of other countries too.
Do you think having a strict immigration policy is inflationary?
I think it's, again, all about how you implement it. That's my position. So number one, if you look at Britain, it has we're sixth in the world in GDP. We're 21st in the world in terms of GDP per capita, right? And I would argue GDP per capita is actually a reasonably good bellwether for quality of life for people in this country. No one knows better than I the contribution that immigrants can make to this country. My parents came here 40 years ago, contributed half a century of service to the NHS. I've done my part as well to create jobs and pay taxes. But again, it's about numbers. And it's about making sure that we have, number one, a secure border. If you don't have a secure border, you actually don't have a coherent immigration policy because you're actually unable to implement it. Secondly, it's working out, okay, how do we ensure that we are able to address some of these huge problems the country has, which are driven in no small part, not exclusively, but in no small part by exploding demand for those services.
Zia Youssef, Reform Party UK donor and founder of Velocity Black, speaking to Bloomberg. Let's talk a little bit more about this, because in some ways this immigration story is one that is represented in a number of different political narratives that we're discussing at the moment. The United States, you could argue it's been a huge force in terms of the growth story that we've seen out of the United States. Here in the UK, it's becoming very divisive. Can you grow the UK economy without immigration is a key concern, I think, for a lot of people right now. And the UK, in some ways, is a bit of a microcosm. Post-Brexit, have we seen a tighter labour market here because of that lack of immigration that has caused problems? And France grappling with the same challenges as well. Yes, and the great resignation, the great quit post-pandemic, still a feature of the labour markets, of course, as well. Yep. And the extent to which you turn to immigration to alleviate that pressure on the labour market is going to be one that runs into politics. Interesting to think how different communities, different groups vote in these forthcoming elections, though, because on the one hand, immigration rhetoric is front and centre, certainly here in the UK, and has been to some degree in the US. But then there's tensions within some communities
around the Middle East and politics in the Middle East, and that has an impact, certainly, on the way that certain communities will vote and their enthusiasm for, say, the Democrats in the United States or for the Labour Party here in the UK. So this is going to be quite a nuanced story, perhaps.
You talk about the UK, the US. It's, of course, a theme in France, as you mentioned as well. It's also a theme in the Netherlands. And this is the conversation we started off at the start of the program with Sandra Flippin talking about the fact that ASML is actively petitioned the government to say reduce your immigration or lax your immigration policy a little bit so we can hire the talent that we need to keep it going. That, even though it's a very Dutch story, suddenly becomes a broader story because that, to your point, is inflation. That's the very first question you asked your guest.
It's something that's been represented in the United States as well. Big tech, therefore, in the US has been seeking to bring in talent. Has brought in a lot of talent via the visa system, and that may change under a Trump administration.
Right. And this is something that, to your point, that the Fed is talking about as well, right? Is this something you factor into the jobs market? How quickly does that data show up?
OK, talking of data, let's have a quick rundown of what we're looking ahead to today. Euro area PPI, German 10-year auction, €5 billion coming in that format. US initial jobless claims in focus, Fed meeting minutes in focus as well. And worth pointing out, Guy, that some of these data points are going to come a little earlier in the week than we would have expected because, of course, 4th of July is voting day here, but it's a holiday in the United States.
It's the end of the week. Today is the end of the week. You've got elections coming up. You've got the US closed. You've got light liquidity on Friday. The potential for problems on Friday, I think, could be quite significant. You get a big kind of number out of payrolls. How could that affect the narrative? You get people positioning around the French election without the liquidity maybe to do so. How could that affect the market? So I think Friday's going to be a really interesting session. It's just not going to be it's going to be an abnormal session. So today's the kind of... the US markets are closing early today, so maybe not even today is the last kind of full session of the week, I would argue.
Well, don't leave just yet. We need you for the next 2
days.
days.
I'm here. I'm looking forward to the next 2 days.
He's here. The euro-dollar story, I think, is so fascinating going into the end of the week. On Friday, to your point, on the one hand, you've got the French elections, which, of course, is going to be, do you cash out of the euro in advance of that? Do you dive in on kind of the expectation of gridlock, perhaps? On the other side of that trade, you've got the payrolls report, you've got the data in the States, and then whatever the Biden-Trump fallout looks like in terms of polling, whether that shows up in positioning for the dollar as well. To me, it's the euro-dollar that I've got my eye on.
Yeah, and you were asking Mark Gudmore a little earlier about this as well, weren't you, and what his expectation. I think it is going to be fascinating the way all of this falls in quite a quiet market, or will people decide that this data point is too important and they'll stick around for it? I don't know. Is it a jobs report that has that kind of elevated status?
So Dan Curtis, who kind of crunches our numbers for us and makes us look smart, ran the numbers on this yesterday for me. The payrolls number, when it falls on this date, comes with lighter liquidity. So we should expect lighter liquidity. We are probably going to see lighter liquidity. We're going to see less volume going through the market. Lighter liquidity can cause trouble. And so historically, that's what you would normally expect. So Friday could be a bumpy ride.
I'm going to broaden it out here. It's not just Friday we're talking about because so much of the geopolitical risk is happening. We're heading into the summer session. So I wonder how much of the real actual positioning story is kicked out into September, for example, specifically in this region, given that light liquidity story. And does that show up in the markets as green on the screen? Is it just autopilot all day long?
OK, I think we're going to return to our UK conversation.
Let's do it.
We are going to be talking shortly to somebody who knows a thing or two about how politics in the UK works, how the business community is going to be looking ahead to the election that takes place tomorrow. I'm very pleased to say that we're joined now by Sam Ajima, former UK government minister, non-executive director of Goldman Sachs International, CEO of the international advisory firm SG. And Sam, very nice to speak to you. The last time I spoke to you years ago on the Green outside the Houses of Parliament, so nice to see you. We haven't got long for our conversation, so let's jump right in. Are you expecting a supermajority, if we can use that word advisedly, if that means much in the UK? What difference will that make to what Labour intends to do?
I think we're going to see a very significant majority. Looking at the polls now, it's even questionable whether the Conservatives will be the main opposition party. That is a sea change. That will be a sea change in British politics. What would mean is that, obviously, from a business point of view, you would have a party with a secure majority that is not in hock to the extremes of the party. But it would also mean the centre of British politics will move. Most business people are focused on the fact that Labour's manifesto is in many ways very close to the Conservative Party manifesto. But when you get into power, you can move the centre. And when you have that kind of majority, I expect to see that. So, for an example, on an issue like Europe, we will be seeing probably the most pro-European government that we've had in the UK in a very long time. And that could mean a very different tone. Starmer is going to be going to the EU. I mean, he's got this summit at Blenheim coming up in 2 weeks' time. He's got NATO. He's going to have the opportunity to reset a lot of these relationships
Does the
very
size
quickly.
of the majority impact how Starmer deals with Europe? If he gets a big majority, do you think he can move more aggressively on that, more quickly on that?
I think his style is clearly to be incrementalist, but in terms of the tone, we've been through a period in the last few years where anything that comes out of the EU under the Conservative government has to be treated with deep scepticism and suspicion. That will not be the case with Starmer. Certainly on defence and security cooperation, I think he will be like to be a more front-footed than maybe the Conservatives would have been. And in very specific areas where there is an open door, I think he'll be going for it.
Is it all about just those specific areas, though? I mean, obviously they've said they've ruled out single market and customs union and the like. And even on those specific areas, is the EU in the mood to listen? They've got enough issues holding things together at the moment. It's a changed EU from the one that Boris Johnson was negotiating with.
I think I can talk about how I see the politics in the UK, and I think it'll be very hard, given that growth is something that Starmer has trumpeted a lot, to see Labour MPs lashing themselves to the detail of Boris Johnson's Brexit deal. If they see that as holding growth back, I think there will be huge pressure, wherever Starmer is coming from his own backbenchers, to do what is needed to do to get growth going. And if you want to get growth going, there are lots of things you need to look at. Lots of difficult things that Starmer will have to address, but certainly the EU part is a key part of it.
Very quickly, I'm going to put you on the spot here. Does that come with political pushback, though? If you do start to see the most pro-European government, does that have kind of a ripple effect in the long run?
I think it's a question of tone and being pragmatic and sensible. I don't think Starmer, from what we've seen of him, is suddenly going to say, let's relitigate the 2016 referendum. But where I can see consequences long term is, for example, on migration. That if you have a situation, if you have a pro-migration government, if the Liberal Democrats have sort of 65 seats, they are also pro-migration. Migration is about net migration 600,000. You can see that down the line, if that isn't really brought under control, the resurgent Conservative Party becomes sort of the English nationalist anti-migration party. That is a scenario that is really possible, and it's kind of what you've seen in France. What didn't seem possible, under Marine Le Pen suddenly seems possible. So that's where I can see effects down the line. But in terms of Europe specifically, I think the public is probably ahead of where the politicians are in terms of needing some change.
Great to see you, Sam. Thanks for stopping by to see us. We really appreciate it. Time beats to Sam Gyimah, former UK Government Minister and CEO of SG. And so that's it. We wrap the programme up. Next stop, Anna, is the UK election. We'll be watching that tomorrow. Yeah, absolutely. That is it for the opening trade. The Pulse is up next. We leave you with European equity markets making modest gains, up by 0.4%, reflecting on those gains in the United States, in the wider tech sector yesterday, even if not Nvidia. And we work our way towards the 4th of July. This is Bloomberg.